Canada has long relied on the United States as its primary market for oil and natural gas. In fact, for decades, the US has been Canada's most significant trading partner, accounting for nearly 91% of Canada's energy exports in 2021. However, in a stunning twist of economic fate, Canada is now cutting off a significant portion of its energy exports to the US and pivoting its focus toward Asia, specifically Japan, with a groundbreaking 0% tariff export deal. This bold move comes as Canada faces mounting trade tensions, escalating tariffs, and geopolitical shifts that threaten to disrupt long-standing trade ties. In today's video, we'll explore how these tensions have forced Canada to rethink its energy export strategy and the potential global implications of this historic pivot. Stay tuned as we dive deep into the story behind Canada's strategic reorientation and its efforts to secure its energy future in an increasingly complex world. Chapter 1. The trade tensions that sparked a shift. It all began earlier this month when tensions between the US and Canada reached a breaking point. In a controversial move, President Donald Trump announced steep new tariffs on Canadian goods, citing concerns ranging from illegal immigration to the flow of illicit fentanyl. The US tariffs, set to take effect on February 4, 2025, targeted a wide range of Canadian products, including steel, aluminum, and machinery. While energy products, namely oil and gas, were initially spared, they would face a reduced tariff rate of 10%, a measure that, although lower, would still disrupt trade flows. This shift in policy left Canada vulnerable and prompted a re-evaluation of its economic strategy. Especially in the energy sector, Prime Minister Justin Trudeau's government quickly retaliated. They imposed matching tariffs on $30 billion worth of US goods, including items like beer, clothing, household appliances, and cars, further escalating the trade standoff. The Canadian government signaled that the scope of the retaliatory tariffs could grow to cover an additional $125 billion in US imports. The dispute led to emergency talks, and while there was a temporary 30-day delay in the tariffs, the damage was done. The impasse served as a wake-up call for Canadian policymakers. Canada could no longer afford to rely so heavily on the US market for its energy exports. This standoff highlighted not only the fragility of the US-Canada trade relationship but also the need for Canada to diversify its energy export markets. Relying on one trading partner, especially one as volatile as the United States, leaves the country exposed to significant economic and geopolitical risks. The imposition of tariffs has led to increased prices for everyday goods in Canada. For instance, the cost of household appliances has risen by approximately 5%, directly affecting consumers' purchasing decisions. Additionally, the uncertainty surrounding trade relations has led to job insecurity in sectors heavily reliant on exports to the US, such as manufacturing and agriculture. Chapter 2. Rethinking the market. Canada looks beyond the US. With the threat of higher tariffs and trade instability on the horizon, Canada's policymakers began to seek alternative markets. Their search led them across the Pacific to Japan, a nation with a growing demand for liquefied natural gas, LNG, and a key partner in Canada's new energy strategy. Japan, the world's fourth-largest economy, has long been a major player in the global energy market. Despite aggressive efforts to increase its reliance on renewable energy sources and nuclear power, Japan still heavily depends on imported LNG to power its industries and energy infrastructure. In 2023 alone, Japan imported a staggering 64.8 million tons of LNG, making it the world's second-largest importer after China. Canada's west coast is uniquely positioned to tap into this market. Unlike oil shipments from the US Gulf Coast, which must navigate the lengthy and sometimes costly transit through the Panama Canal, a shipment from Vancouver to Tokyo takes only about 11 days, drastically reducing both transportation time and cost. This proximity means Canadian energy products can reach the Japanese market faster, improving Canada's competitiveness in a region that places a premium on energy security. But it's not just about logistics. Canada's LNG is around 40% less carbon-intensive than LNG from the US, a critical selling point for environmentally conscious markets like Japan. As Japan intensifies its efforts to combat climate change, its government is increasingly inclined to source energy from lower carbon sources. This environmental edge, combined with competitive pricing, makes Canadian LNG an attractive option for Japan's energy future. Canada's west coast is perfectly positioned to tap into this opportunity. By shifting energy exports away from the US and toward Japan, Canada can mitigate the risks of the trade war while securing new markets for its energy products. Diversifying energy exports to Japan has the potential to stabilize Canada's energy sector, leading to more consistent energy prices for consumers. Additionally, the environmental benefits of exporting lower-carbon LNG align with Canada's commitments to climate change mitigation, contributing to a healthier environment for all. Chapter 3. The LNG Revolution, a new era for Canadian energy. To meet this new demand, Canada has ramped up investments in LNG infrastructure. Leading the charge is the LNG Canada project, a massive $40 billion export terminal being built in Kitimat, British Columbia, backed by energy giants like Shell, Mitsubishi, and Petronas. LNG Canada is slated to start shipments by mid-2025. In its first phase, the project will produce around 14 million tons of LNG annually. This will make it one of the largest LNG export facilities in the world and a key player in the growing global LNG market. But LNG Canada is just the beginning. Indigenous-led projects are also gaining traction, offering a new model for energy development. Cedar LNG, an innovative project led by the Haisla Nation, aims to export 3 million tons of LNG annually by 2028. While Woodfibre LNG in Squamish is on track to be one of the first LNG facilities in the world to operate entirely on electric power, further reducing its carbon footprint. These projects not only promise to diversify Canada's export portfolio but also represent a shift toward more sustainable and community-driven energy solutions. Through strategic investments like these, Canada is not only positioning itself to be a major player in the global LNG market, but it is also setting the stage to reduce its dependence on the US and embrace new energy opportunities in Asia. The development of LNG projects is expected to create thousands of jobs in construction, operations, and maintenance, providing employment opportunities for local communities. Additionally, the increased export capacity is anticipated to stabilize domestic natural gas prices, potentially lowering heating costs for Canadian households. Chapter 4. Economic and political implications. The decision to pivot from the US market to Japan has profound economic and political implications. Economically, the imposition of tariffs, whether on oil or other goods, threatens to raise costs for both consumers and businesses. In 2023, Canada exported approximately 3.9 million barrels per day, MMBD, of crude oil, with 91%, 3.8 MMBD, directed to the United States. These exports were valued at $130 billion, representing 16% of Canada's total export value. A dramatic shift away from this market could cause short-term disruptions, including volatility in oil prices and potential supply chain interruptions in the US. However, the pivot toward Japan opens new opportunities, especially in the rapidly growing LNG sector. Politically, this pivot marks a major break from Canada's historical economic and diplomatic reliance on the United States. According to a 2024 poll, over 90% of Canadians support reducing the country's economic dependence on the US. The rising wave of nationalism, fueled by trade disputes, has sparked calls for "Buy Canadian" campaigns, further exacerbating tensions between the two countries. This shift, while economically necessary, signals a broader desire for Canadian sovereignty in trade matters. Canadian leaders, including Prime Minister Trudeau, now face the challenge of balancing short-term economic protection with long-term strategic growth. As the trade war with the US intensifies, Canada's government is determined to invest in new markets, reduce vulnerability, and secure long-term economic stability. The shift in trade dynamics may lead to increased costs for imported goods, affecting consumer prices. However, the diversification of export markets is expected to bolster Canada's economic resilience, potentially leading to more stable employment opportunities and economic growth in the long term. Chapter 5. Inside the numbers, trade data and market shifts. Let's take a closer look at the numbers. In 2023, nearly all of Canada's crude oil exports were destined for the United States. This deep reliance left Canada exposed to any shifts in US policy. For example, in 2023, the US received nearly 60% of all Canadian crude oil exports, accounting for 4 million barrels per day. But with the imposition of tariffs, This market is no longer secure. Canada's shift toward LNG, however, offers a more diversified and less politically sensitive option. By 2028, Canada is expected to increase its LNG export capacity to over 20 million tons per annum, MTPA, positioning itself as a major competitor to traditional LNG exporters like Qatar and Australia. This transition is already being reflected in the country's infrastructure developments, with LNG Canada set to become operational in mid-2025. While short-term disruptions are expected as Canada rebalances its energy exports, the long-term outlook is promising. Analysts forecast a compound annual growth rate, CAGR, of 10.1% for global LNG demand between 2023 and 2030, meaning that countries like Japan will continue to seek reliable suppliers like Canada for their energy needs. The diversification of export markets is expected to stabilize Canada's energy sector, leading to more consistent energy prices for consumers. Additionally, the environmental benefits of exporting lower-carbon LNG align with Canada's commitments to climate change mitigation, contributing to a healthier environment for all. Chapter 6. The Strategic Advantage, Why Japan? So why Japan? For starters, Japan is facing its own energy challenges. Despite ongoing efforts to reduce reliance on fossil fuels, Japan still depends heavily on imported LNG for its industrial sectors, including high-tech manufacturing and data centers. In fact, Japan imports over 64.8 million tons of LNG per year. With demand projected to grow in the coming decades, the Japanese government has long sought reliable, sustainable, and environmentally responsible suppliers. Canada's geographical advantage allows it to fulfill these demands more efficiently than other LNG exporters. With shorter shipping times from Vancouver to Japan, Canadian LNG can reach its destination more quickly, reducing both transit time and costs. Moreover, the lower carbon footprint of Canadian LNG makes it an appealing option as Japan strives to meet its climate goals. The synergies between Canadian energy supply and Japanese demand make this partnership highly strategic, and the discussions between Canadian energy ministers and Japanese counterparts have only intensified, underscoring the mutual benefits of this new energy alliance. The diversification of energy sources is expected to enhance energy security in Japan, potentially leading to more stable energy prices for consumers. Additionally, the environmental benefits of sourcing LNG from Canada align with Japan's commitments to reducing greenhouse gas emissions, contributing to a healthier environment for all. Chapter 7. The Bigger Picture, Global Impacts and Future Outlook. While the immediate focus is on Canada's pivot to Japan, the ripple effects of this strategy extend far beyond North America and Asia. Canada's move is part of a broader global trend where countries are rethinking their trade dependencies in light of increasing geopolitical risks. Diversifying energy markets is no longer just an economic decision, it is a strategic necessity. Experts predict that while the transition to new markets may cause short-term volatility in prices, the long-term benefits of diversification will outweigh the risks. For the United States, losing a significant share of Canadian oil exports could lead to price increases, particularly in regions like the Midwest, where U.S. refineries are heavily dependent on Canadian heavy crude. On the global stage, Canada's shift could prompt other nations to reassess their trade policies. As countries navigate an increasingly volatile geopolitical landscape, Canada's energy pivot serves as a powerful reminder that flexibility, foresight, and diversification are essential to long-term economic resilience. The global shift toward diversified energy sources is expected to lead to more stable energy prices worldwide, benefiting consumers through reduced price volatility. Additionally, the environmental benefits of sourcing energy from lower carbon sources contribute to global efforts in combating climate change, fostering a healthier planet for future generations. In summary, Canada's decision to shift its focus from the US to Japan is a bold, strategic move driven by necessity. Faced with the disruptive force of steep tariffs and the threat of a trade war, Canada is turning adversity into opportunity by investing in world-class LNG projects and forging new partnerships in Asia. While there are challenges ahead, from infrastructure hurdles to market competition, the long-term vision is clear: diversify, innovate, and secure a stable economic future. This is a pivotal moment for Canada, one that could redefine global energy markets and set a new course for international trade. What do you think about Canada's pivot to Japan? Will it help stabilize the Canadian economy in the face of US tariffs? Or will it create new challenges? Let us know your thoughts in the comments below.